In this video, I'm going to go over some factors that could affect where gold could end up in September. And a lot of this just boils down to whether or not the stock market is, if this is the start of a move into a major 4-year cycle low pullback, or if this is just going to be a run-of-the-mill intermediate cycle pullback. So here was our last confirmed 4-year cycle low. This was the COVID crash. And this is a good example of an extreme right translated cycle. So the previous 4-year cycle low occurred in 2016, so you'd expect, generally expect the next one to occur in 2020, which it did. But what we have here is the rally out of that 2016 low pushed very deep into that 4-year cycle. So it rallied like a little over like 3.5 years. So what that does is it gives very little time for the move into the 4-year cycle low to complete. So generally you get a crash, just because there's not a lot of time left, and so the entire move has to be compressed very quickly, and that's exactly what happened. And so we could be looking at the same thing here. If March of 2020 was our bottom, then we would expect the 4-year cycle low to occur here in 2024, and maybe the same thing is happening here. We've got to compress the entire move down into the 4-year cycle low in, basically, since this intermediate cycle is going to be in the timing band for a bottom in September, and if it's going to also turn into a larger degree 4-year cycle low, then we've only got about 5, 6, 7 weeks to complete this move. And so if this is going to be a 4-year cycle low, then we're going to have something very similar to what happened here. We're going to have a crash in order to shave off 1,000 or more points, and we need to break this we need to break this 4-year trend line in order to confirm this as a 4-year cycle low. And actually, let me convert this over to the weekly chart. All right, so another parameter that generally I consider has to be met for to confirm a 4-year cycle low is that price needs to at least come back down and tag, or almost tag, the 200-week moving average. And you can see we're stretched a long ways above that 200-week moving average. So the argument could be made, and has been made, that we got an early 4-year cycle low. Sometimes this will happen. Sometimes the cycle can shrink, and usually if it shrinks, then the next cycle will expand. And like I said, the argument has been made that this was an early 4-year cycle low, since it did come down to tag that 200-week moving average. And that is a distinct possibility. And I'm going to say that September is our last chance. If we don't get a crash in September, or maybe early October at the latest, a crash that brings price all the way back down to this 200-week moving average, then I am going to be 100% on board that this was the 4-year cycle low right here. But we just don't know that yet. So this is what I'm watching. If this is going to turn out to be a 4-year cycle low, and we're going to have a crash event similar to what happened during the COVID, and the stock market's going to collapse at least back down to this 200-week moving average, then we're going to have margin calls that are going to, basically everything, the baby is going to get thrown out with the bathwater, and that will include gold. So now let me go over to the gold chart. All right, so here's the 4-year cycle low in the stock market here in gold. And you can see gold resisted, and then finally in the last, I believe this was about 9 days, last 9 days of that crash in the stock market, the selling pressure just infected everything, margin calls hitting, and at some point you just have to sell anything, any and everything. And so that's where gold gave up as well. The miners just got destroyed, and but then, you know, bounced back very quickly. So if that's what's going to happen, if stocks are going to give us a 4-year cycle low, then gold will probably try to resist, and then eventually it will collapse. And that is the scenario where you have to come back down and retest this breakout at 2100, more or less, 2090 to be official. That would be the scenario where gold comes back down to test this. Without that, without a 4-year cycle low, I don't think that gold is going to come back down to test this breakout at this point. So now, if there is no 4-year cycle low, and this just turns out to be a standard run-of-the-mill intermediate cycle correction in the stock market, it could get semi-extreme, but we're not going to shed 1,000 points in the S&P. We might shed another 150 or 200, but we're not going to lose 1,000 points, and we're not going to have a massive crash like we had during COVID. And in that scenario, then this is a pretty bullish look for gold. You know, I've been on record. I would have liked to seen this churn continue for another month and take us into September, but we're getting a breakout here, and it is sustained, at least so far. So you know, if all we're going to get is a general, you know, run-of-the-mill intermediate degree correction in the stock market, then this is a bullish case for gold that probably is not going to get slammed when the stock market makes its final intermediate bottom in September. So right now, I'm giving this the benefit of the doubt. This is bullish. Yes, I would have liked to have seen the churn last at least one more month, but we don't always get what we want. And right now, we've got a breakout, and it's holding. At least it's holding this week above that 2450 resistance zone. And barring a 4-year cycle low, then I think, you know, I'm going to give this the benefit of the doubt and say we've got, at least for now anyway, we've got a confirmed breakout. And now if I back this down to the daily chart, you can kind of see here we've had 3 attempts to get above it. This was a false breakout, and we had a correction, and this correction allowed silver to complete that lower low. In my previous X post, I noted that silver had completed basically all the parameters it needed to do to signal a completed intermediate cycle low. It made lower lows and lower highs. It broke the intermediate trend line. It turned the 50-day moving average down. So this corrective move, this kind of a fake breakout here in gold, allowed silver to complete all of the parameters for an intermediate cycle low. But then gold recovered, and we've got a confirmed breakout, and this is occurring pretty early in this daily cycle, and the breakout held on Friday's. You know, there was an attempt to block gold from recovering 2500, but as I'm on record saying, the cartel is done. They're not going to be able to keep gold suppressed anymore. They got their teeth kicked in here. You know, they tried multiple times to drive gold back below 2000. They couldn't do it. They couldn't hold it, and they just got the living hell kicked out of them on the ensuing short squeeze that developed from trying to block gold above 2000. So the cartel's dead. We don't have to worry about that anymore. So, you know, they can try all they want to block gold at 2500. They're not going to be able to do it. And maybe gold is ready to take off to the upside here right now. And as I said, barring a 4-year cycle low in the stock market, then I'm ready to be bullish on the metals again. Right here, as long as this breakout continues to hold, then I'm ready to be bullish metals. Now, on the other hand, if the stock market just really starts to crash tomorrow morning, or you know, we get some kind of a kind of a weak bounce back up to the 50-day moving average in the S&P and then rolls over really quickly and we really start to accelerate to the downside, some warning signs that, you know, a 4-year cycle low is starting to develop, then you better be prepared because at some point gold will give up the ghost too, and we're going to come back down and test this 2100 zone if that's what plays out in the stock market. But nobody has a crystal ball at this point, so we don't know yet. So we'll just have to play it by ear. As of right now, I'm bullish as long as this breakout continues to hold and as long as we don't get any warning signs that the stock market is ready to crash into a 4-year cycle low.